You want to fly it right into the side of the mountain? Be my guest. The company will never complain.
Wow. And the company won't be there if you do any of the above because you will have blown it in the club, right?
Exactly.
Or wherever you're spending
Champagne
your money.
room.
The champagne room in the club, yes.
Okay,
Yeah,
so something you said reminded me of a quick question that I had. Because I've heard...
Making it rain. Making it
Spread
rain.
it out, right.
Because I've heard mixed reviews on this. For myself is quarterly estimated tax payments. Is that what it's called? Estimated quarterly tax payments. Estimated tax payments quarterly. But
either or.
But should any business owner be making quarterly estimated tax payments, or does it depend on how much you're making, or like it depends on how much you're making?
It really does.
Okay.
You know, honestly, I don't know what the current amounts are. I do have some clients that don't pay their quarterlies, but that's because they've got enough money in the bank.
Sure.
So that when I tell them, hey, you know what, the bad news is that you owe the IRS $60,000. The good news is that it's there.
Yeah.
You know, so it's gonna suck to do this, but write the check and put a whole bunch of zeros on the back and, you know, mail it in. If they've got it, then fine. You know, the quarterlies, in my opinion, is really just to make sure that the decision to be undisciplined isn't there, because the company does have to hold the money and make those payments and things. And it's a lot easier to write a check for 12 or 15 than it is for 50 or 60.
That's very true.
And I'm sure dependent on how much a company is making or an individual is making, being a sole proprietor or anything like that, depending on how much they're making, you should be, I mean, the accountant that I spoke to when I first started my own venture told me, put this much away every time you get paid.
Exactly.
And you, as someone, like, I'm saying this because I know this, but more for our audience, is that you know those numbers, right? Like, if you're making this much, then you really should be putting this percent of your income away.
Right. What I generally do for most of my clients is move about 40% of their net income into a liability account. And then when they look at it on their balance sheet, and this is all internal, so you know, it's just them to be looking at it and things like that. But they can look at it and say, wow, you know, we've got, I don't know, $12,000 in our bank account. But when you look further down, it says, well, yeah, but 4 of it belongs to the IRS. And then when you look further down and look at the equity component of the balance sheet, you know that you can take $8,000 out and go back to the club if you want to with
Champagne
that
room.
component.
Make it rain.
Exactly. You can make it rain with that 8.
Right.
But the 4 is always in the bank to cover that, you know, tax component. You know, yeah. And I typically just take 40%, which is generally a bit liberal. You know, it would probably be less, but I'd much rather tell my clients, you know, in the vein of conservatism, that you just let that sit there.
Yeah.
And we don't have to write a check quite that big.
Yeah.
You know, I'd rather them have it, not need all of it.
Yeah.
You know, than to need it and not
have it.
Right. So those are some. What are some other common mistakes you see people make in their bookkeeping? Because you fixed it, like that's fixed. You know. So what common mistakes do you see people make when they're doing their own bookkeeping?
Ooh. It could be any number of things. I mean, the list is so long.
Really?
Yeah, I really
Give us
couldn't tell
3.
you. Give you 3. People expense things that can't be expensed.
One reason to need a CPA when you're expensing things that should not be expensed. And what would that be? Like, what does a person expense that they shouldn't?
Well, when you pay for something, you can be paying an expense or you could be purchasing an asset.
Okay.
Assets are not tax deductible.
Okay.
Okay. The depreciation on those assets are tax deductible as you utilize the purpose or the reason why you bought this thing.
Like a computer.
Like a computer. Okay.
Okay.
Or maybe a truck.
Or a truck.
Okay. So let's say we buy a $20,000 truck. Unless you're going to use all of the value of that truck in 1 year, you can't allow that 1 year to take the benefit of the expense.
Oh, yeah.
Okay.
You see, the truck's use has to be depreciated over the period of time that the company is going to use the automobile.
Okay.
Because it's not fair that, you know, year 2, 3, and 4 has no proportional expense in relation to the 2001, let's say, purchase. You see, but what happens is that they say, well, we bought a truck, so we wrote the check for $20,000, so it's a $20,000 expense, and now my income statement drops down by $20,000.
I've seen that.
A lot of us have. You know, my because my P&L or income statement drops down by $20,000, now my tax liability has dropped considerably.
Right.
But it hasn't. You see,
Uncle Sam knows that.
Uncle Sam knows that, exactly.
Right.
The only amount that your tax liability has really dropped by is by the amount of usage that you've actually consumed for that period.
Right.
You know.
Wow. So now, on a personal note, I want to get to a personal note.
Okay.
And how we convinced you to come on. I had a talk with your wife, and I asked her to have a talk with you to ask you to please come on. And in her telling me, she told me how you guys met, and she told me how you helped her personally with her challenges with keeping money in her own account.
Okay.
And so let's just tell us about that, because that, to me, that was the cutest story. And it might help someone with their personal finances, because I think people don't realize that when you're dealing with a certified public accountant or an accountant, they can help you on a personal level too. It's not just all about business. So I think that's something that needs to be, so your story will help with that.
Well, I'd like to preface the story by saying I'm sorry, sweetheart, for putting your business in the street, first off.
Okay.
All right. So
Well, we're going to do it.
we were dating for maybe a year or so.
Uh-huh.
And she was always that chick that was always broke.
Okay.
You know? I hope it doesn't sound bad. She was always light in the pockets.
We've all been there.
You know?
Not me.
She
Well, yeah, I'm sure. But anyway,
she'd get
you
her
were that
paycheck.
guy.
She'd get her paycheck, you know, Friday morning, direct deposit, whatever it is, Friday morning, and by lunchtime, she was on E.
Yeah.
And I'd always ask her, well, why are you broke? Why are you broke? You know, how are you? Well, you know, my expenses outweigh my income. And there's really nothing I can do about it. I mean, my rent is this, my car note is that, and everything else is this, and that's just it. And I wouldn't bring it up frequently because I knew it was kind of a sore spot for her.
Yeah.
And just one day we're at lunch somewhere in Manhattan Beach, and she just asks the waitress to hand her a little cocktail napkin and a pencil.
Right.
And she just starts writing things down. I'm going, what are you doing over there? She said, just shut up and hold on, and I'll show you in a minute. And she turns it around and hands it to me. She says, there, those are all my expenses for the month. On the left is what I make every month. On the right is what I have to spend every month just to survive.
Right.
And I'm just looking at it, and I saw, she knows the story better than I do, but, you know, I see 2 or 3 different things in her list of expenses, and I said, well, you know, if we switch this around a little bit, or if we just kind of rub on it a little bit, you know, I could save you probably $300 or $400 a month.
Yeah.
And I said, you know, wait till we get back home and, you know, let's sit down and hit the adding machine a little bit. Let me play my piano a little bit and see if I can, you know, help you figure out what's going on. And that's exactly what we did. I helped her make a couple of hard decisions. They really were. But once she made them, she realized that she was, in fact, able to put away $400 or $500 a month.
A month, which a year is like $6,000.
Yeah.
You know,
crazy.
That of money that it's just found money now that you thought wasn't there.
Right.
And you know, $5,000 or $6,000 a month is a big deal in a paycheck. You know, she had a paycheck that she was getting, is my point.
Yeah.
You know, she went to work every day. Her employer paid her. She had a paycheck, and there was $500 in her paycheck that was being wasted.
Yeah.
You know, that now turned into $6,000 a year savings.
You know, and that's actually been maybe 4 or 5 years since then. And she's gotten, you know, subsequent raises, and as a result, that margin has been able to, you know, grow
up.
You know, which is great. You know.
Yeah, because I know she was telling me. She said, he just just found money in my paycheck that I thought wasn't there. And she said she said at that point she wished she would have let you see what was happening a lot sooner, because in hindsight.
That would have been a year.
Oh yeah. So a lot of times, we kind of hide, our
That's
personal
exactly what I was gonna
expenses,
say.
and we justify being broke. Right? We justify it by saying, well, these are my expenses and this is how much money I make and that's why I'm broke and that's it.
Right.
When
exactly.
that's never it. It's
never
the
it.
way you spend it.
Yeah. And I'll tell you what happens. Just like you said, how people keep their own finances very, very private.
Mm-hmm.
What happens is that people become emotionally attached to their money.
That's very true.
Okay. And as such, they really can't make smart, strategic decisions because they're emotionally tied to it.
Yeah.
Yeah, it's not objective for them.
It's not objective at all. I work very hard, I make my money, and I do what I want with my money, and I, in a lot of ways, can't see the forest for the trees.
Right.
The first thing that I had to tell her to do, and this is the best advice I can probably give everyone who's listening, stop swiping.
Yes.
Do not swipe. Okay, it's such an easy thing to do.
Elizabeth's over there grinning. Stop swiping.
Stop swiping.
Swiper, no swipey.
Right?
People grab their
Dora.
ATM debit cards
Yeah.
and they go to the movie theater and they just hand it to the person. They just slide it in a little cash register slot on the side. And because there's not the physical, and very, very, cerebral feel of reaching in your pocket,
Right.
and licking that old nasty thumb and actually counting out, dollar bills and counting out dollar bills.
Yeah.
It's a much more convenient and less thought-provoking theory to just give somebody a piece of plastic, and then money just disappears out of your bank account.
Yeah.
And that's why you don't have it. And when you wind up putting money in your wallet, you say, okay, I've got $60 that has to last me until Friday or through the weekend. Now you're going to be much more selective in what you're deciding to buy with that limited amount of money.
Right.
When
Because
you
it
have-
is limited.
Because it's limited,
Right.
When you have X in the bank and you just can go swipe happy, the money just disappears and it's out of mind, it's out of sight, it's out of mind.
Right.
But when you have to, like I said, open your wallet up and separate yourself from those dead presidents, you say, you know what, I might have worked a little harder.
Yeah.
And then you say, well, you know what, I still got to buy gas. Oh, well, I can't buy, I don't know, these roller skates,
Right.
because I have to buy gasoline for the week.
Right.
Or I need lunch money for the week or something
Right.
along those lines.
So it allows you to be a lot more disciplined with your money by using cash. And you know what? Every financial expert that we've had come on has said that.
Really?
And
It's been a very recurring thing
it's a
lately.
recurring
Yeah.
thing, and that's a good thing. So that's something we know that we as individuals have to do so that we
Right.
can hold on to some of our money. Now, before we run out of time, I want you to tell people how they can get in contact with you, because I find you very comforting.
Thank you.
Really. And usually, so does Elizabeth. She's probably going to call you. She's probably going to call you before you can get out of the parking over there. So it's like, excuse me, but I have 5 questions that I didn't want to ask on air.
Right.
But, and that's everybody. So, you're not alone. Like you said, it's very intimidating talking to someone. And I feel like you're very comfortable.
Thank you.
And, approachable. And on whatever economic level a person is on, they should come and talk to you, because you can help them from wherever they are, whether they have, a small business and all that. So give me your contact information so everybody can call you.
Well, I have a website.
Okay.
It's keyseraccounting.com, www.keyser accounting.com. My phone number is 213-293-9309.
Love it. Korey, it has been a pleasure having you on. You've certainly answered a lot of our questions, and it was such a calm and easy conversation with an accountant. And we were all a little nervous, weren't we? Who would have known?
Yeah.
So this has been pleasant. Now, one thing I want you to do is promise that you'll come back on and give us some more tax advice when you can. Just come on and just give us tax advice and tips for our personal finance and for our business finance. because you can really help people who have small businesses and help us with our personal finance. Elizabeth's going to probably call you when we get off the air and, sit down, huh, Elizabeth, and just kind of talk to you.
Let's get down to brass tacks here.
Yes, exactly. Exactly.
I'll come back on April 16th.
Okay. Wait, let's look at the calendar. That might be the right day to come. No, actually, really, we want you to come on before then, so you can tell people how to prepare for that April date.
It'd be my pleasure.
Well, thank
you all once again for having me.
Thank you.
Oh, it's been a pleasure. Thank you so much for coming on. We had Korey Keyser with Keyser Financial Services on today. Check him out. He's the right one, ladies and gentlemen, for all your accounting needs. Thank you, Korey.
Thank you.
Yeah.